Chinese markets closing mixed on the day. When we look at what's happening on the European markets, it's the same kind of picture, except on that particular side, we have investors worrying about the FOMC minutes, and it's starting to show in the behavior of some of the markets today. We have the French CAC down 2.5%. German DAX down 1.6%, and the FTSE off by 1.9%. When we look at what's happening on the US future side, also in pre-trade marginally lower. Goldman Sachs earlier cut their US economy forecast to 5.5% from 9%, and that's adding to that negative sentiment that we are seeing. To talk to us about some of the stuff playing out in the markets, as well as company financials, the likes of Standard Banks also releasing their numbers, we are joined by Bright Khumalo, who's from Vestec Asset Management. Bright, thank you so much for your time. Yesterday was a very interesting time at around 1:25 following the JSE delay. How are we doing 24 hours later?
I think you're referring to the technical difficulties we were experiencing locally after, massive volumes went through the previous day, with regards to the rebalancing of Naspers, obviously. Today, the markets opened, in the red. We continued that, the red from yesterday, unfortunately. As I look at it right now, we're down about 2.83%. The resources index continues to slide 3.6% down now, meaning, basically yesterday we had the biggest down day in the resources 10 index in a month. That's continuing. If I look at my screen right now, we still have Kumba down 8%, Impala Platinum down 6.9%, even African Rainbow down 6.3% as well there. But today I see that there are some stuff in the top 40 that are in the green, like Napier Rockcastle up 3.4%. We've got Goldfields up 1.6%. Maybe there's some glimmer of hope there.
All right, so earlier we had Standard Bank releasing their numbers showing that the SA business rebounded strongly, record earnings of almost 3 times that of the first half of 2020. What did you make of those numbers?
Look, we have to, consider the base when you look at financial stocks, especially since most of them had a lot of they raised a lot of cash for provisions with regards to the COVID-19. And obviously, they don't have to raise any further provisions this year. So you're seeing all of that go straight down to bottom line, which is good, I guess. It means these businesses can go back to paying dividends. Once again, we've seen that with ABSA as well on Monday when they released their numbers. So it's good news altogether for shareholders. But, locally, I wouldn't be too excited about financial companies right now because our own economic recovery hasn't actually come off the ground just yet. We're still on the administering of the vaccine side of things. So as soon as that's done, we will talk about, policies to actually help, individuals on the ground, to dust themselves off from COVID-19 and participate actively in the local economy. And then the financial companies, which are services businesses at the end of the day, this is where they'll come in and lend even more cash to these individuals who, will start, seeing the economic recovery, especially in those smaller businesses.
Right. When we talk about the FOMC minutes, I was looking at European markets and, stories saying that investors are concerned about, they're still digesting those FOMC minutes. Does that worry you in terms of whether the global economy can actually handle that shock of reduced liquidity?
Look, I wouldn't be too worried about the global markets, in terms of actually absorbing any shock, because markets for very, very many long times or many years have actually seen worse than this. Not so long ago, we were all worried about, the world ending. We had a pandemic and the market seemed to have, just been fine after that. On Monday, we were reporting that US markets were 100% up from their lowest point during the pandemic. So this is not a big thing. I wouldn't be too worried too much about what the Fed has to say about tapering and whatnot. What really matters is the economic recovery and how the companies are going to benefit from that economic recovery to create jobs, which will lead to, I guess, better shareholder value.
So yesterday, markets reporting that Robinhood warning that the second quarter revenue will actually surge at this particular point, fueled by a boom in cryptocurrency trading. And I'm wondering, what do you make of U.S. stock Robinhood?
Robinhood is a very interesting company. Obviously, they've spoken a lot about democratizing investing, basically making investing available to the average man on the street, which can be a good thing. I'm a proponent of, personal finance and taking, making sure that your house is in order, and obviously investing early while you're still very young and you still don't have, a lot of responsibilities. Robinhood seems to be getting this very right. But, there's a trick here. I mean, they also sell products, that are very high risk to individuals who don't understand these things. So I guess it comes with the terrain, right? Because at the end of the day, they're a brokerage firm and they have to make their earnings one way or the other.